Boeing shares are in the spotlight once again after a 787 Dreamliner operated by Air India crashed seconds after takeoff last month. Now, as it stands at the time of making this recording, the fault is not seen to be with Boeing, but Boeing has had a series of struggles recently, particularly in the last decade, with design faults, production issues, and the latest trade war has weighed on Boeing as it competes with its major European competitor, Airbus. However, Boeing has said that it delivered 60 aircraft in June, which is its best showing in about a year and a half. Now, on Tuesday, July the 29th, before the Open, Boeing's earnings will be released. This tends to be a relatively weak period for Boeing. You can see on average there's a negative return of 2.37%, and there's only a 40% winning trade percentage. If you look at Boeing technically, you can see that it's trying to break out of this long-term monthly trend line, and it's just moving into the 100 exponential moving average on the monthly chart. And also there's pretty stiff resistance up ahead at that 250, 260 region. So just to be aware, that would be a major area for sellers to potentially enter. And if earnings really disappoint, then we could see a rejection from that moving average and a move back down to test this trend line at the 200 region. So that's certainly to be aware of. Trade risks, all outlooks have risks. And of course, if investors are more confident about Boeing, with Japan recently ordering 100 new planes as part of the US-Japan trade deal, and Boeing manages to regain market share and accelerate against Airbus, and if the earnings are seen to be more optimistic, that could indeed boost Boeing's share price. So just be aware of that risk that's coming up ahead. And remember, don't just trade it, seize an exit.